This week, we had some massive Ethereum news as well as BMNR specific news. We had more companies accumulating Ethereum from hedge funds to institutions across the world. We had more adoption from brands. We had more technical patterns and treasury company adoption. We had ecosystem specific news. Tom Lee even jumped in an interview. And we had some big news around JP Morgan allowing Ethereum and Bitcoin as collateral. So I'm going to talk about that. We had some macro catalysts. I have like 50 tabs here that I want to get through in 20 minutes or less. I don't think I'm going to be able to do it. I'm going to try to run through them as quickly as I possibly can. Without further ado, let's jump right in. Okay, so this is the third or the fourth video of this nature that I'm doing. I'm doing them weekly recaps on BMNR and Ethereum. I talk about all the news that I saw over the past week and I highlight why it's significant. Let me start off here first and foremost. I made a post a couple of days ago and I said, look, I said I was done accumulating BMNR, but that's a lie because I actually just bought some more. And in this video, I'm going to explain some of the reasons why I bought more. Of course, we had Tom Lee on an interview here on Anthony Papagliano's channel. We're not obviously going to watch all of that, but there's some clips I've accumulated. If you have the time, definitely watch this. This was a good watch. Let's start first and foremost off with some accumulation. So here we can see that investors are still locked in on Ethereum. The top assets by total value locked in the past 24 hours is 83.6 billion for Ethereum, higher than all of these other chains. This news was posted on October 18th, just last weekend. I posted this a couple of days ago. I said, if institutional dollars flow from Bitcoin to Ethereum, then Ethereum wins. And if Ethereum wins, of course, BMNR wins. And this is a post we're seeing by Post Codex's CEO.
In terms of rotation right now?
I think we're broadly seeing rotation out of Bitcoin and into Ethereum, and I think that makes a lot of sense. I think Ethereum is commonly known as the choice for most Wall Street folks, and that's because of its neutrality and its robustness. And I think the stablecoin chain built on Ethereum will be the one that wins.
Okay, Hao-Nan, great having you here at the exchange. Thank you so much for joining me today.
Thanks.
So in this clip, he talks about institutional money flowing out of Bitcoin into Ethereum and that Ethereum remains the blockchain of choice for Wall Street. I also saw this, the Ethereum on exchange reserves on all exchanges is plummeting. And of course, you get supply shock when you see that the supply is going off of exchanges. You don't have a lot of supply on exchanges and the demand is high. So you can see there's only 6.7 million ETH left on spot exchanges. This is by CryptoQuant. It's only a matter of time before the real supply shock hits. And this number has been plummeting over the past couple of months, starting really in August and now at the lows in October. And of course, it kind of correlates, right, with a lot of these digital asset treasury companies coming into the space with institutions accumulating Ethereum. That's all going to go off exchanges and it's going to lead to some supply shocks. Chris says that more and more stablecoins are being used and coming out of the volume of transactions. This is going to continue to grow as adoption continues to grow. And of course, that is going to drive up the price of Ethereum as well. I also saw this Bitcoin versus Ethereum quarterly ETF flows. Bitcoin is seen in blue here, Ethereum in gray. And we can see for Q3 2025, the flows for Ethereum overtook the flows for Bitcoin for the first time ever. This is from an ETF perspective. So we can see the accumulation of ETFs here. Again, we're only in our first category with regards to accumulation. So I'm trying to get through these as fast as possible. I saw this wallets holding 100 to 10,000 Ethereum increase their holdings by 218 ETH in the past week. And this clip I really want to play because this is Tom Lee on the Anthony Papagliano podcast earlier this week. Let's give it a listen.
But Ethereum, we've been writing about, is probably in a super cycle, similar to what happened to Wall Street in 1971. Because in 1971, the US withdrew from the gold standard. So the dollar became actually synthetic, completely synthetic. Mm-hmm. So Wall Street stepped in to make sure the dollar stayed the reserve currency. So they built futures, CDs, money markets, and it succeeded because within 10 years, even though the dollar was only 27% of GDP, it became 53% of central bank reserves and 80% of all financial market quotes. So the yen didn't win, the Deutsche Mark didn't win, or the French franc. In 2025, we're tokenizing more than just the dollar. The stablecoin is the breakout product, which is a tokenized dollar. But as you know, Larry Fink, Robinhood, they want to tokenize everything on the blockchain, and they're going to build it on a neutral public chain, which is right now, 70% of that is happening on Ethereum. So Ethereum is experiencing that same 1971 moment where Wall Street's rebuilding everything onto a blockchain, which we think it'll be Ethereum. Ethereum could recover its Bitcoin Ethereum ratios, 2021 highs. That would put Ethereum at around 21,000 per token. So it's, I think, an undervalued asset. And by acquiring more and staking it, we benefit from the power law. So it's been successful so far. BitMine is the 30th most traded stock in America today, trading $2.1 billion a day.
So I'm going to pause there. The clip is a little bit longer, but in that segment, he talks a little bit about why the accumulation has been happening and where he thinks it can go with regards to Bitcoin as an anchor, where Ethereum can overtake Bitcoin. And really, the other thing that he talks about here is adoption on Ethereum and why that's going to continue to be the case. That's going to drive this all higher. Of course, as Ethereum benefits, BMNR benefits. He talked a little bit about that 5% allocation and then having rewards through staking thereafter. But let's pause on that adoption because I highlighted a couple of points here. So first, there's this. CNBC just confirmed Walmart is now going to accept Ethereum and crypto payments through OnePay Cash integrated with Coinbase. Walmart, of course, serves over 150 million weekly customers. So let's take a listen to this clip on CNBC.
And just the ease of which regular folks, people who go to Walmart, there are 150 million Americans who use Walmart online or in person every week, can now actually have crypto in the very same app. They can buy it, they can hold it, they can store it, they can trade it if they want. And then when they want to go pay for something, they can turn it into cash and like we said, go OnePay is actually integrated into the checkouts of Walmart. So it is, I think, a milestone in that case, Carl.
So as I'm talking more and more about the adoption from businesses as well as the volume from institutions that are all flowing into Ethereum, just keep in mind that the volume on exchanges is at multi-month lows right now and even climbing lower every single week because the demand is far outstripping the supply, which means that one of the big things you should look out for and that I'm looking out for over the next couple of months is supply shock that's going to lead this much higher. And there's a lot to support that. Here we have Shopify integrating with Ethereum payments. They're the world's biggest e-commerce platform. And Ethereum is, of course, the blockchain of choice. I talked a little bit last week about this. 400 million plus PayPal users can now send and receive Ethereum directly, wallet to wallet, without any middleman or bank or anything like that, just purely peer-to-peer. Ethereum adoption is increasing across the board. Japan is going to classify Ethereum as a financial product here. This just came out this week. And you can see this adoption life cycle. We're still very early days, and we're about to see an acceleration in the adoption life cycle of Ethereum. That's going to be powered by the volume of institutions. It's also going to be powered by the commercial applications of these businesses that are going to move towards the blockchain for the utility benefits that the blockchain provides. So that's something that's a little bit longer tail. It's not going to be next week or next month, but all of these are signs that it's moving in the right direction. I have talked about tokenization in the past a little bit. Tom Lee just talked about it in that Anthony Pompliano interview. Chris Patel here highlighted, I wonder if it might not be a good idea for Robinhood to launch its own ETH digital asset treasury or buy ETH on Hood's balance sheet. We know a lot of companies have bought Bitcoin on their balance sheet. Not so many have bought ETH on their balance sheet. Robinhood is generating a lot of cash flow and can use a portion of that and some share issuances to accumulate. Imagine if any other brokers had done the same when Bitcoin was $10,000. Their market caps would be jacked from the book value expansion. As we know, companies buying Bitcoin and putting it on their balance sheet has become somewhat mainstream. And now that we're seeing more and more applications for Ethereum on the utility level, we could see more and more companies just buying it, leaving it there for the passive staking benefits, and having it as an asset instead of just cash. We saw a rumor here that Ferrari is going to launch its new token on Ethereum. And from a technical perspective, there's one piece of news this week that I think was really, really interesting that I didn't know about. Here we have John Bollinger, the creator of the Bollinger Band, who said there's a potential W bottom in Bollinger Band terms in ETH USD and Sol USD, but not in Bitcoin USD. Going to be time to pay attention soon, I think. This is the creator of the Bollinger Band, one of the biggest technical indicators out there. And he makes barely one crypto call a year. He hasn't made an Ethereum call in the last 3 years until this week. And he basically said, hey, it's time for Ethereum to rally. And this is the last time that he made an Ethereum call back in 2022. We saw this massive rally from 1,500 all the way up to 4,000. And he's made similar calls on Bitcoin in the past. He says, hey, this W bottom is setting up on Bitcoin. This was back in April, and we saw Bitcoin rally 70% after that post was made. So this is somebody who's literally created his own technical indicator. He knows what he's talking about. He doesn't make calls very often, but when he does make calls from a technical perspective, he usually nails those calls. So really interesting to see that he just posted this week on Ethereum for the first time in the last 3 years. This post here says both Tom Lee and John Bollinger see a potential W bottom forming on Ethereum. The smart money is watching, and of course, this is a technical indicator. So that was really unique and bullish in my perspective. You can also see this Ethereum mirroring gold's breakout. And there is some relationship from a technical pattern where you see gold and Bitcoin have this interesting relation where gold usually front runs crypto running. So here in 2020, you had gold topping, and that really marked the start of Bitcoin's rally. When gold started to fade, it could happen again because gold started to give up all of those gains that it formed. Here you have a bullish pennant pattern forming on Ethereum, of course, because it backtested that resistance level. Here you have a wick-off reaccumulation pattern. There's so many technical patterns that point to the fact that Ethereum is going to rally. And there's so many fundamental patterns that point to that same fact as well. And of course, as Sam says here, if Ethereum breaks out, I'd expect BMNR to accelerate faster. Of course, we know BMNR is a leverage bet on Ethereum. Well, now let's talk about BMNR specifically. They're back to accumulating Ethereum week in and week out. They're up to 3.2 million Ethereum, up from 303 on October 12th. This is as of October 19th. And so they are acquiring about 200,000 Ethereum per week towards their 5% target. And here you can see their ETH holdings is a pretty steady line going upwards every single week. They're buying more ETH. And as we mentioned in the video last week, what that means for us as BMNR shareholders is that the Ethereum per share of our BMNR shares increases every single week because they're buying more and more. And in fact, I also posted this, Ethereum digital asset treasuries flip Bitcoin digital asset treasuries as a percentage of the total supply. Previously, I showed you a post around the ETF inflows where Ethereum ETFs are now accumulating more than Bitcoin ETFs are. And now even the digital asset treasuries are increasing as a percentage of the total supply. And there's an added benefit for Ethereum, right? Because whether you're an individual company buying Ethereum for your balance sheet, or whether you're an institution or an individual retail shareholder, the benefit of having Ethereum is that you can always stake it, lock up that supply, and collect some passive income while doing that. And so I think that's one of the reasons why Ethereum is seeing this massive surge, is to get all of those staking benefits, which of course is Bitmine's plan as well. SharpLink bought another 19,000 worth of Ethereum, and here's how the rankings currently stand. Bitmine is the top Ethereum treasury with 3.2 million ETH. SBET is 859,000. So Bitmine is by far the largest Ethereum treasury out there, and they're the biggest accumulators on a weekly basis as well. Ethereum treasury companies are showing signs of a bottom formation. Since August 2025, they have been going down only, which is also the reason behind ETH underperformance. But now it seems as though a reversal is coming soon, so we have to keep an eye on. And this is all the major Ethereum companies. We talked a little bit on a technical perspective how they're bottoming. Now let's move on to some ecosystem benefits. Well, we had an AWS outage this week. It affected a whole bunch of companies. Guess what it didn't affect? It didn't affect Ethereum. And that uptime is one of the reasons why it's very bullish. Here we have Arthur Hayes, who has just asked why Bitcoin is going to be flipped by Ethereum. And here's his answer.
I think ETH is the best L1 by number of developers, mindshare. If you talk about new primitives in DeFi, that I think is a killer app for this smart contract thing, at least right now, they all start on Ethereum. And so it has the best talent pool, and that's what's going to generate the value for the chain, which is why I've always been constructive on ETH, even when Solana was crushing it because they crushed the meme coin and sort of the post FTX massive return.
So that's really interesting because we covered this exact thing last week in my previous video. And so it's nice here that Arthur Hayes, who is having dinner with Tom Lee, is also talking about why Ethereum could flip Bitcoin potentially. This is the co-founder of Ethereum. He's saying that Ethereum is going to be the main digital asset settlement layer for the planet. Let's take a listen.
Well, I think that in terms of the broad information technology architecture of the world, I think we're going to see Ethereum layer 1 be the main digital asset settlement layer for the planet. We think of it as trustware. Mark Andreessen 25 years ago said that software was going to eat the world. It did. It was good, and then it turned not so good. And so what we really need is for trust to resaturate the technology landscape. And so upon Ethereum layer 1, essentially, we believe very strongly that we got the architecture correct and that we need one base layer, and we're going to rapidly improve it in terms of scalability, et cetera. But then it's really important to have a lot of execution networks that inherit the security guarantee of layer 1, and in this way we can get more and more scalable at layer 2, layer 3, etc.
And I'm going to move a little bit quickly because there's still so much I have to get through, and I'm already over 20 minutes here. Ethereum's Fusaka upgrade enters the final testnet phase ahead of December 3rd mainnet rollout. The upgrade introduces a gas cap per transaction to improve block efficiency and prepare the network for parallel execution. So we're seeing the network is going to get a big improvement here on December 3rd. That's something that we have to look out for. And I also saw this and I found it interesting.
better. And if you look at it that way, it doesn't matter who gets to 5% first. What matters is, are you promoting your protocol? Are you benevolent? Are you taking that token, in my case, ETH, in your case, Solana, and doing something positive to advance the tokenization, the stablecoin initiatives, institutional DeFi? That is the friction and competition, because otherwise we're looking at it too small. $4 trillion is nothing. It's the $700 trillion that is the target of innovation and transformation. And I'll be controversial, and I say that is what I'm more focused on than arguing about who's going to get to 5% first. That is what's going to transform our daily lives.
So I really like this clip. And the reason why is because it's really a forest for the trees type of clip where we're arguing, oh, which digital asset treasury company is going to be the one that wins out, which one is going to get to 5% first. And meanwhile, this is a reminder of how much there is there to be capitalized and how small Ethereum is relative to the global financial economy and different asset classes. Like if you compare it to gold or silver or even Bitcoin for that matter, it's still minuscule with a long runway for growth. This is the Fed Reserve Governor Chris Waller, who basically came out this week and said crypto is woven into the fabric of payment and financial systems. Let's give it a listen.
This is an acknowledgement that distributed ledgers and crypto assets are no longer on the fringes, but are increasingly woven into the fabric of the payment and financial system. Now, before we hear from these innovators, I would like to touch on roles that the Federal Reserve plays to support the private sector. These include serving as a convener to solve coordination problems and operating core payment and settlement infrastructure. We are also looking ahead, conducting hands-on research on tokenization, using smart contracts, and the intersection of AI and payments for use in our own payment systems. We do this to understand the innovation happening within the payment system, as well as to evaluate whether these technologies could provide opportunities to upgrade our own payment infrastructures and to enable us to have deeper conversations with the industry on these new technologies.
You see this like broad acceptance from a regulatory perspective, from an institutional perspective, of Ethereum. And a lot of it is happening with this new administration, right? And here's another clip that talks about BlackRock and Goldman launching stablecoins of Tom Lee on the Anthony Pompliano podcast. I put this on 1.5x for you guys, so I hope you can listen.
Smart contracts, I think it's proving that it's a fat protocol. So instead of TCP/IP being the base layer for Ethereum, whatever you're staking and operating on Ethereum, the value is captured on the blockchain itself. It's acting as a monetary base. So to me, the price of Ethereum probably goes up a lot in the future because, I mean, this is a simple mechanical measure. If BlackRock and Goldman launch stablecoins and they have tokenized stocks and it's an L2, but it runs on Ethereum's L1, they'll want to care how the L1 upgrades. So they're going to eventually own Ethereum. So then if 20 investment banks buy Ethereum as a balance sheet reserve, as much as they hold Bitcoin as reserve, then the price of Ethereum is going to go up a lot. That makes sense.
You have to think about the game theory around these massive institutions. And Tom Lee is basically saying, look, like if they want to have a vote in terms of how this develops and they need to have skin in the game, they need to have a stake. And as a result of that, Ethereum is going to go up. Again, keep in mind the supply on exchanges is plummeting. And it's as a result of all of these things that I'm showing you around the demand. I also want to show you this clip from Bit Digital CEO. This is from Token 2049 Singapore. He basically said if Bitcoin and Ethereum were both invented on the same day, you'd probably never even have heard of Bitcoin because of the utility benefits that Ethereum has.
You can disintermediate and rewrite the financial system with smart contracts. It has staking. Again, Bitcoin doesn't have smart contracts. Bitcoin doesn't have staking. It is a superior form of treasury. And again, we were kind of stuck because of Gary Gensler. He's gone. And that's why you're seeing an unleashing of Ethereum. And frankly, if Bitcoin and Ethereum were invented on the same day, you probably would never have heard of Bitcoin at this point. Bitcoin had a head start. I understand that. It was safely classified as a commodity. Ethereum was stuck. Now it's unleashed. So that's why we're all here today on the stage.
And you could see on the last clip, Tom Lee is, of course, also there, and the co-founder of Ethereum, who you just heard from earlier in this video, also there. So really interesting things that are happening here with regards to Ethereum. And I think the institutional world is just waking up. Here you have a clip. I'm not going to play it. It's a 4-minute clip. Tom Lee on the Palm podcast was talking about gold and basically saying if gold settles at $5,000, the fair value of Bitcoin is much, much higher, between $1.6 and $2 million a coin. And of course, that makes sense, right? Because gold is going up, the global liquidity going up, which is fueling all assets to go up. Bitcoin is still stuck down here. Even though it's had a run over 100,000, it's still nowhere near where Tom Lee thinks it can go, and it should go, and it will go. And I also have this clip, which I won't play for the sake of time, but he basically said, hey, Bitcoin is going to go to 200,000 in the next 65 days by the end of the calendar year, that is still his target. We also saw news here around the Tokyo-listed quantum solutions company that just bought 2,365 ETH in 7 days. They are now the largest Ethereum treasury company in Japan, yet another institution that's diving headfirst into being a digital asset treasury on the Ethereum blockchain. Last week, we talked about another one. And so here we have Quantum Solutions. Japan's largest Ethereum digital asset treasury. This is the original post. I'm proud to announce that we've accumulated 2,365 ETH in 7 days, making it the largest ETH DAT outside the US. More ETH is incoming, so they're going to be buying more. Thanks for your support, Kathy Wood and ARK Invest. I saw Roy responding to something like this saying, look, the fun thing about BitMine is that the more digital asset treasury companies there are buying ETH, the better it is because it increases the value of the underlying asset by locking up more Ethereum. It's particularly true of international DATs like this one from BitMine's perspective. Digital asset treasury companies compete for liquidity from shareholders, but retail institutions prefer domestic allocation. As a result, there's little change in liquidity and demand on BMNR, even while more of that 121 million ETH is bought and held. Added buying pressure from inflows over time skews the supply-demand equilibrium of Ethereum to one that's prone to price accumulation. In other words, what Roy is saying is exactly what we said here. More people getting interested in Ethereum, buying Ethereum lowers the supply dramatically, which is what we're seeing exactly play out. And the demand still stays elevated, and that's going to cause Ethereum to go up. And as Ethereum goes up, of course, BMNR benefits from that. And this next piece of news is, I think, one of the biggest pieces of news that I saw this week. JP Morgan, to allow institutional clients to use Bitcoin and Ethereum as collateral, they permitted Bitcoin and Ethereum as loan collateral for institutions. This is the largest bank in the US that are signaling that digital assets are mature enough to sit alongside treasuries and equities as institutional grade collateral. It's good for Bitcoin, but it's great for Ethereum because Ethereum is a productive asset. You can stake it and you can get those staking benefits. And I think that's going to be a big unlock for companies holding crypto on their balance sheet. So you have increased demand from ETFs, you have increased demand from institutions, you have increased demand from nation states, and you have increased demand from companies wanting to add it on their balance sheet. And this is going to be a big move in that direction. The last time something new became collateral, it was US Treasuries. I absolutely love this point. And so this is just a Bloomberg post around JP Morgan allowing Bitcoin and Ether as collateral as they push more and more towards crypto. And as I saw that, I also couldn't help but think about this clip. This clip was from a couple years ago, and this is what Jamie Dimon had to say about crypto.
Deeply opposed to crypto, Bitcoin, etc. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance. And that is a use case because it is somewhat anonymous, not fully, and because you can move money instantaneously, and because it doesn't go through, as you mentioned, all these systems have built up over many years, know your customers, sanctions, OFAC, they can get bypass all of that. If I was the government, I'd close it down.
Okay.
Basically, Jamie Dimon, the CEO of JP Morgan, a couple years ago said, if I was the government, I would close crypto down. And between then and now, they've completely changed their tune, accumulating heavily and now also allowing institutional clients to have loan collateral on their crypto. This is a clip from CNBC around the announcement of JP Morgan allowing the acceptance of Bitcoin as collateral. Let's give it a very quick listen. Because we're super late as is.
JP Morgan is allowing clients to pledge Bitcoin and Ether as collateral for loans.
It's still early days, and for now, the concept is limited to the firm's trading business. JP Morgan's trading business has, for a few months now, accepted IBIT, the ETF, as a form of collateral, which it sees as less volatile as the underlying currency. However, I'm told that certain hedge fund managers and asset managers are demanding more of these types of crypto services, although, again, I'm told that offering Bitcoin and Ether as collateral for trading is not imminent at the firm. While many remember, as you mentioned, Morgan, Jamie Dimon's comments about Bitcoin being, say, a pet rock, he has moderated his tone recently.
So, yeah, it's definitely not a pet rock anymore, at least to Jamie Dimon. Here's the president of the United States on what he had to say about crypto.
I'm also committed to signing landmark crypto market structure legislation this year to grow the industry. We're going to be growing it even more than people ever thought. It's a really hot industry.
Even more legislation that's going to be pushing towards adoption of crypto. Europe is also pushing for a domestic digital asset market and the creation of a digital euro. They fear foreign stablecoins, so they're building their own. It's likely going to be on Ethereum when that does happen. Kevin O'Leary here had a minute-long clip where he said trillions of dollars will flow into the crypto market once the structure bill passes. Tom Lee and Michael Saylor, CEO of MicroStrategy, are going to meet with the U.S. Senate to speed up the market structure bill. So you could be seeing legislative regulatory tailwinds as well. This, I think, was a good post summarizing everything, and I didn't have a chance to really dive deep. I'm going to have to split up these weekly videos into smaller chunks in the future. You have a tokenization boom. You have stablecoin explosion. You have this new upgrade on December 3rd. That's going to help with scalability with faster blocks and parallel executions. Institutions are accumulating. We've been seeing this. You have this zero knowledge adoption, political and regulatory tailwinds. You have staking, on-chain activity, and developer growth. And you have Ethereum becoming the financial internet. This is from BMNR Bulls, a great resource on BMNR. Okay, so I promised this video was going to be under 20 minutes, and I immediately broke that promise. There's a lot that's going on with Ethereum. There's a lot that's going on with BMNR, and there's many things that are forcing me to buy more every single week because I genuinely believe that it's going to be exploding higher from an adoption perspective, from an ecosystem benefit perspective, from institutions, from companies, from retail, and from digital asset treasuries all across the board. I think that there's going to be a lot more volume flowing into Ethereum. And as a result, the Ethereum price is going to go up. And as BMNR shareholders, we're going to benefit heavily from that because if we do, in fact, enter a supply shock period, then that's going to be very beneficial for us as shareholders as the Ethereum price shoots up higher. And if we take out the actual crypto that I own, because I own Bitcoin and Ethereum, and if we look at only equities, BMNR is actually my fourth largest position. It's over 5% of my portfolio right now. And the reason why I'm accumulating even more is because of all of these news that's coming out. Hope you enjoyed this video. If you did, please share it out and increase the awareness around this play. Please do your own homework. I'm just the guy on the internet talking about what I like personally. And please subscribe to the channel for more. I try to do these videos on a weekly basis, and clearly there is a ton of news that I haven't been able to get to or speak in depth on. So if you do enjoy this, please like the video, share it out, and leave a comment and let me know. Thank you so much for watching. I'll see you in the next one.